The budget for 24-25 was presented by the Finance Minister on 23rd of July. This was subsequent to the interim budget which was presented earlier by the same Finance Minister but in the earlier government. This year, the Finance Minister has made quite a few changes in the TDS and TCS. Let me give you a brief on some of these changes, which has the maximum possible impact. To start with, let me brief you on some of the tax TDS reductions that has taken place. Commission was, the TDS on commission was around 5%. This has been reduced to 2%, whether it is a regular commission or brokerage, or commission on sale of lottery tickets, or commission to LIC agents. The first two is going to be applicable from 1st of October, whereas for the LIC agents, the commission, the TDS on commission would be applicable in the next financial year. Apart from this, currently there was a 1% TDS for e-com operators when they were making payments to the e-com participants. In fact, there was a lot of hue and cry about this. So now this has been reduced to 0.1%, and this would be applicable within this financial year itself. Apart from that, there was a provision to deduct TDS on rent when the rent amount was more than 50,000 rupees per month. This has also been reduced from 5% to 2%. One good thing that has happened is, on purchase of units, repurchase of units by mutual funds or the United Trust of India, there was a 20% TDS on this. This will still continue to be there till 30th of September, but subsequent to that, this has been fully removed. So this could be a big relief for people trying to sell back the units to the mutual fund. Currently, TDS is there in luxury goods, and only motor car is covered on that. So if you buy a car beyond 10 lakhs of rupees, there was the impact of TCS. Now this scope has been widened. The list has not yet been provided by the government, but they have specified that they will keep on adding more items within this list, and once the purchases exceed 10 lakh, then there would be incidence of TCS. Under section 197, certificates were issued for lower deduction or no deduction of TDS or TCS. It was in the case of interest and maybe so many other sections. But it was not covered for purchase of goods. As you know, for purchase of goods, there's also an element of TDS or TCS, but there was no provision to have any kind of a concessional rate or zero TDS or TCS. Now this section 197 has now been extended to both these sections, so eligible SSEs will be able to take advantage of this and save themselves from the the cash flow issues related to TDS and TCS in this. One very interesting thing has happened, especially for the employees. In the case of employees, when they report their other income beyond the salary which the company is already paying them, they were supposed to report on that, and the company used to add that income along with their salary income and then calculate what the tax was, and the TDS was accordingly computed month on month basis. The funny part about the whole thing was the income was being reported, but there was no provision to report the TDS on those income. So effectively what was happening was the TDS was being deducted twice. Once the employer is deducting on the same income, and maybe from the income where the income generation source was also deducting. So now this has been rationalized, and now the employee would be able to also report what was the TDS on those other income, so that while calculating TDS, the employer will take that into consideration and will only deduct TDS cumulatively in such a way that the TDS liability in totality actually matches with the income. There is a change in the threshold rules when it comes to TDS on purchase of immovable property. Earlier, it was based on the amount the buyer was paying to a seller. And if it exceeded 50 lakhs, then there was a TDS implication. Now what has happened is, it is the value of the property. If the value of the property is 50 lakhs and beyond, TDS would apply. The difference now is, suppose there were two sellers and one buyer. So earlier you were paying 25 lakhs each or maybe 30 lakhs each. Since it is below 50 lakhs, there was no TDS. But now since the value of the property is 60 lakhs, TDS would apply in both the cases. Same thing can happen, you could have one seller, two buyers. So again the amount gets split. So whether it is one buyer, one seller, or multiple buyers, multiple sellers, it's not important what amount is being paid to whom. The more important part is what is the value of the property. If the value of the property is 50 lakhs and beyond, TDS would apply. So these are some of the changes which will be effective from 1st of October. Obviously, it is the budget needs to be passed by the Parliament, and then this will all start applying. Now there are some more changes applied. Some more changes have been announced that would be effective from the next financial year. One very interesting new TDS provision has been added, which is TDS for payment to partners. It could be in form of a salary, it could be bonus, it could be incentives. So the firm, whenever they're making payments to a partner, there would be an implication of 10% TDS. Another thing about correction statements. Currently, correction statements could be filed for any earlier year. With very, very limited restrictions, it could be done. But now there's a major change made now that correction returns can only be done for the previous last 6 years. So if you have a correction before 6 years, you will not be able to do it. This will start from 1st of April. So it is very important, if you have some old corrections still pending, finish it off as soon as possible, because then there would be a major restriction from next year. In TDS, in case you deposit late, you're paying an interest of 1.5%. But for TCS, you're paying only 1%. From the next financial year, this has also been increased to 1.5%, bringing it at par with the TDS. Another very interesting change has been made, although it may not be visible to most of us, but it is good to know about it. Suppose the last date of filing of a TDS return, say, was 31st July. So if you go beyond 31st July, so you have the usual penalties of delayed filing and all, that's okay. But under section 271H, you had to file this within 1 year from the last date which was scheduled for filing. If you don't file within 1 year, then there are some stringent penal actions. Now this period of 1 year has now been reduced to 1 month. So it means that returns which fall due for filing on 31st of July has to be filed by 31st of August. And if it is not done, the same penal provisions will apply. This is a step towards, for better compliance, what the finance minister talked about. Well, these are some of the changes, but this is just, scraping the surface. I think you will need to pick up the point and go more deep into it for better understanding. Hope you find this video useful. Thank you so much.